Hello folks, you're welcome back. This is Carrie's Trading Institute and this is my end of week commentary for the dollar and foreign currencies. So we're going to look at what the dollar and foreign currencies has been reacting to beginning from the market open on Sunday going through the week. And just so you know, today also it's going to be NFP. We're anticipating the NFP news event coming up later in the day. So if you're a newbie trader, you don't want to be in the marketplace during such event, you should stay on the sideline, study what price action is going to react to during such an event. It's usually not worth it because of the risks you are going to expose yourself to. Your stop losses are not going to be respected because of the speed of price delivery it's going to come into the market with. So quickly, let's look at what the dollar is doing on the higher time frame. As usual, we like to know what institutional order flow is on the higher time frames, and this is the monthly time frame. You could see that price has been in a bearish institutional order flow because we've seen price trying to retrace into a discount between the low to the high of this entire range of price action. Previously, we traded into a buy side imbalance, sell side inefficiency, and that rejection into the candle. All right, so what I'm seeing currently is that if you look at the previous two candles, you can see that this is a bearish order flow. Why? Because the candles has been showing willingness to take out previous monthly low, all right, respecting the highs but taking out the lows. So we are in a bearish institutional order flow. And on the monthly time frame, the immediate draw on liquidity will be this previous old low, because there will be a pool of sell side liquidity residing below that low. So this is our new month. The market opens and start to reprice into that previous week monthly range. This is the previous monthly candle. So this new month the market opens and it's repriced into that range. We are going to see that on the weekly and the daily time frame, but overall on the monthly time frame, this is my immediate draw on liquidity, and the tiny fair value gap right below it here, that will be the draw on liquidity. Okay, that's my hack for identifying where the draw on liquidity is residing. Okay guys, so we just go down to the weekly time frame, and on the weekly time frame we had outlined in the previous week commentary that we wanted to see the dollar repriced into that bearish mitigation block, which the dollar has obviously repriced into that previous mitigation block with an implied fair value gap. What is that implied fair value gap? 50% of this candle range, 50% of this candle wick. That is an implied fair value gap. All right, so we're going to see, so if we are bearish, where would be my next objective? My next objective should be to see price trade back into this low. You can see that we are also in a bearish market structure. On the weekly, price has been forming bearish expansions, bullish retracement, bearish expansions, bullish retracements, bearish expansions, bullish retracements. Price has been resisting the highs but breaking the lows. That's a bearish market structure on the weekly time frame. All right, so we go down to the daily time frame, and of course you can see that the drawn liquidity still is that old low on the monthly, and you can see that on the weekly time frame it's coinciding with that fair value gap of the monthly time frame. Then on the daily time frame, you can see this is the daily time frame. The daily time frame we outlined in the previous week's commentary that wanted to see the dollar reprice into this internal range, this inefficiency. Wanted to see it rebalance this inefficiency, and especially to refine this, you can see that this is a fair value right at the mitigation block, or rather the breaker block of the daily time frame. If you're still struggling to understand the difference between a breaker and mitigation block, please take your time, watch one of the videos on the channel where I talked about the 7 institutional reference points, so you'll be able to clearly understand how to identify breakers and mitigation blocks. All right, so this is a breaker. Why is it a breaker? Because we see price taking out this high before the shift of market structure right here. So what we have here is a repricing into that breaker block. You can see it here. Price traded into the breaker block. So I would like to see the dollar reprice into that drawn liquidity. There is also another drawn liquidity here right below this low right here, and as well the other block. Remember, when we are repricing, we are looking for institutional reference points in the order of importance: mitigation block, breaker blocks, fair values, liquidity voids, or rather liquidity voids, then fair value, then other blocks, then rejection blocks, and old highs, old lows. So you can see here what we have is we do not see a fair value, we see liquidity void, so we need to see this inefficiency rebalance. There's another block here, there's an old low here, there's relative equal lows here, so that's a liquidity pool. All this will be the drawn liquidity on the daily time frame. Then let's just try to check 4-hour and 1-hour time frame, see if we have a shift of market structure to the downside. It's going to confirm if this is going to hold. All right, so you can see on the 4-hour, price took out the high here, price took out the liquidity below here. This is looking like a reversal pattern, and then we see price still breaking the low here. So what you have also here is a shift of market structure on the 4-hour. So I would like to see this guy trade down into those levels, the draws on liquidities that we outlined. So you can see this inefficiency, this liquidity void here. We like to see it rebalance as well. Okay, at least for the NFP today, because today is NFP, we like to see NFP do this, trade into these levels. Okay, then on the 1 hour, you can see that on the 1 hour it's a clear shift of market structure. You can see that on the 1 hour it's a clear shift of market structure. Price takes out the high, and obviously it's breaking all of these lows. The body of the candles are closing below the low here. So this is a shift of market structure on the 1 hour. Alright guys, so we are looking to sell the dollar while we buy foreign currencies at the moment, at least ahead of NFP. Okay, or during NFP, we would like to see these things unfold with speed. Okay, so let's quickly look at GBPUSD. Alright, so this is GBPUSD as well. Let's just go to the weekly time frame or the monthly time frame, see if we have something on the monthly time frame. So this is the monthly time frame of GBPUSD chart. So you can see that what happened is that price gave us that expansion, but almost traded into this drawn liquidity that we've been paying attention to for quite some months now. We've been paying attention to this drawn liquidity. Okay, so price almost tapped that drawn liquidity, but it didn't get to do that. So this new month, price opened and trades back into that previous monthly range. And as you can see here, what we have here as well is a bullish order block. You can see the last sell candle that was traded through by a buy candle, that's a bullish order block. So price trades into that bullish order block on the monthly time frame, and the drawn liquidity will be that old high and the fair value gap above it. That is the draw on liquidity. Okay, then on the weekly time frame, let's see if we can get something as well. So on the weekly time frame, price also traded into that level and was a previous mitigation block that was retested. Price came back to test our mitigation block, and that fair value right here was what price traded into on the weekly time frame, and is beginning to react off that level. Okay, and you can see we're in a bullish market structure because price has been doing bullish expansions, bearish retracements, bullish expansions, bearish retracements. On the daily time frame, let's take a look. And again, on the weekly time frame, you would recall that we've been calling this volume imbalance as drawn liquidity, that volume imbalance as our drawn liquidity. We are also paying attention to that volume imbalance. This is the monthly fair value with the bearish order block, and then this is that weekly volume imbalance. Then on the daily time frame, you could see that quick rejection candle to the upside after price had traded into this bullish order block. Did you see this bullish order block of the daily time frame? So price traded into the bullish order block, and look at that sharp rejection. So I would like to see a clear bullish order block formed on the 4-hour and a shift of market structure on the 1 hour. Alright, so on the 4-hour, let's take a look at this. On the 4-hour, you can see that we have a good or clear bullish order block that was formed on the 4-hour time frame. Alright, the last sell candle here with the largest candle body. When picking order blocks, pay attention to the candle with the largest body, not this, but this candle with the largest body. That's the order block we are paying attention to. Then look at how the buy candle traded through all of this sell candle. That's a bullish order block. Price traded back into the order block and create another bullish order block. Alright, so I would like to see this guy trade into the draws on liquidity. This is low resistance liquidity run. All of these highs, the highs here, the highs here, the inefficiency of fair value gap here. You can see this, at least for NFP, the old high here. Ultimately, we are looking at this level, but intraday, we are looking at trading into these levels, these relative equal highs. Look at the body of the candles here, they are relatively equal. That's a draw on liquidity. Look at also this level, also we have relative equal highs, so the buy side liquidity, and look at the sell side imbalance, buy side inefficiency with a bearish order block. We like to see price at least reprice into these levels. Okay, now on the 1 hour, we are looking for clear market structure shift. We need to see that shift happen. Okay, price took out the low. You can see it's taking out all of this high, and would like to see it trade into that level. So this is my expectation for the dollar and foreign currency. If you are new on this channel and you like my videos, don't forget to subscribe to this channel, like this video, and hit the notification bell. Until next time, I wish you good luck, good trading, stay safe.